Okay, we are getting some answers. As I said yesterday coming into this, it was not obvious yet that a rotationary regime was going to be net positive for the market. It's why I've had the yellow light that I put on since inflation hit last week vindicated, because now we're lower than where we were in CPI, even though there's a bunch of stuff that's higher. But this is why the simple Occam's razor approach to this market has been tech, mega caps. You might say, well, hold on, that stuff actually outperformed today. It did, but it was also what first faded. That's what got hit this morning early on. We had strength overnight, chips went red, Taiwan Semi was getting hit, Nvidia was down to like 116 at one point. Market was in trouble. So it went into the small caps. But then the small caps, that's not your savior for a lot of different reasons. But as I've argued most simply, small caps are cyclical, they need economic strength, or they're going to need cuts. But cutting because you don't have strength is not a good trade-off. So the fundamental case of trying to trade small caps is like a safety trade when big tech's down. It just doesn't make sense. The big tech is where the actual numbers are going to show up on the earnings. But they're the ones with the valuation problem. So that's where you're still in this situation where rotation is probably a net negative unless the big caps are trading upwards again. So firstly, here's the NASDAQ, because that's where a lot of this starts, okay? This is a 1 month chart. So we're now at the lows of the month. We've already started to crack through some of the support of the NASDAQ. The NASDAQ right now trading just below 20K is starting to get pushed down below levels that could have held. S&Ps now looking at the 1 month too, you unfortunately have a good bit of room here down, it seems like, for the S&Ps, because some of that rotation and breadth kept the S&P more elevated than the tech-heavy NASDAQ. You've got a good bit of downside here. You can see pretty easily, like it's not, you know, this is just where we were less than 20 trading days ago. The message we heard from Jem Carson about the timing of the calendar too, now that we've been breaking the short-term averages, there's nothing really also on the news calendar to suggest there could be some event to prop things up. Investors are trying to play the political game, going back and forth on who's gonna win, what poll's gonna mean what. It's still so early to try and make that the backbone of your case for markets as well. This is simply a game of seeing how big tech trades on the earnings, and the first test with Taiwan Semi didn't go perfectly. It didn't go terribly because Nvidia did firm up by the end of the day, but the fact that the other rotation stuff also got hit raises the risks of a sell-off with correlations going to 1. One of the biggest things that's been happening here that we've talked a lot about for weeks has been the dispersion within the market. The way the correlations have not been there. Things have been breaking down, masked by, first it was the heavy tech strength, and then masked by the breadth. So we've had two different regimes of totally dispersed markets. But in moments where things come together, it can be painful. So that's why, because the NASDAQ's already eating into some of its support, the fact that the S&Ps have a pretty big gap down for another 10 points or so without a lot of support, I think you gotta go red on the risk radar. By the way, that last one there, that was us showing that we're negative since CPI. The fact that you had an event that everybody expected to be hugely bullish and it now isn't because the net move is lower, that's gonna shock some people on the macro. None of this means that the kind of hopeful economic outcomes have disappeared. They haven't. Jobless claims were a little bit weak, but we're still not going over the cliff. But the fact is that it's just not a compelling case in totality for the stock market when big tech is not making new highs anymore. So it could be a temporary one, but because the yellow light panned out and because everything else on this light has worked so well, with the dollar holding the range, bouncing up today off that level I pointed out yesterday, Bitcoin's one-time thing stalling out, bonds generally catching the bid, I think that the framework I'm using is functioning, and worried there that there could be some easy to grasp short-term downside as the correlations finally reconnect.